Welcome back. You're watching ED Insight. India's $100 billion IT and ITES industry is gearing up for its second coming. If the past decade was about offering world-class services, the coming decade will be about building multinational corporations that have a firm footing in the global economy. So what are companies doing to make this leap? Swati D'Souza finds out.
It's been more than a decade since India's IT sector took the world by storm. Over the years, the industry has grown tenfold in revenues from about $10 billion in 2001-2002. But the industry has to do a lot more if it wants to gain the critical mass that global corporations like Microsoft and IBM have. And that's where reinventing and rebooting come in, especially at a time when the fundamentals of the market have changed.
Time to market is becoming almost as important, if not more important than cost. And in that environment, what we are seeing is a massive collision of worlds, wherein historically we had the products world on one side, we had the services world on the other, and we had an infrastructure world on the third. We're seeing the collision of these three worlds. And so what we call alternative business models, wherein you actually combine a service, a software product or IP, data and analytics, and infrastructure in a combined offering to reduce time to market is becoming incredibly important.
The collision of these worlds has thrown up challenges that are shaking the very foundation of the sector.
Fundamentally, I think the model by which customers buy are changing. If in the first 20 years of the Indian IT industry, cost was a key driver, increasingly customers are demanding business outcomes, customers are demanding specialization, and these are going to be the key drivers based on which customers buy services.
Which means that it can't be business as usual here on. Companies will have to widen their horizons and move on from being piecemeal service providers to offering end-to-end solutions. There are two advantages in doing this. One is that the overall cost for the client could come down dramatically. And the second one is that projects could become much larger in size.
We believe that the dollars probably may get shifted, change the business. We'll see the different priorities come up, even though it might be less. But change the business has opportunities certainly which are more market needs and market demands, irrespective of the economy where it is. For example, the investment towards improving and driving the higher customer experience, like that's one area. Risk management, right? You can see like all those areas. Analytics. So there are a few areas.
If you are hyper specialized, if you have the competency of BPO and apps together, and if you are able to bring the value of these two together, and if you have innovative business model, then there are some interesting deals out there in the market because customers are far more open to innovative models.
Apart from being specialized end-to-end service providers, IT companies will have to continue charting newer territories. And that's where cross-border acquisitions come in. According to VCC Ed, last year Indian IT companies sealed 13 cross-border deals worth over 43 billion rupees. In fact, acquisitions have now become imperative for growth in new regions.
Since we may not possess enough domain expertise there, I would think in the coming years you should see far more small acquisitions happening where we would be able to build inorganically domain expertise that we didn't possess today.
If moving into new domains is important, so is having a diversified exposure to global economies and sectors. That helps IT companies hedge their risks more effectively.
Impact of any one geography can be balanced by, the business in the other geographies. So that's one approach that we have taken that will create, I would say, a stable platform for growth for the company.
Well, making sure that we don't do too much focus on banking. So it's really manufacturing, retail, healthcare that we're focusing on. US is still a big market for us, but we're also seeing very good business now in Middle East, including Saudi Arabia, places like Africa, where we are very good in South Africa, expanding to other parts of sub-Saharan Africa.
And last but not the least in any way is to focus on new technologies and platforms to keep pace with changing times.
Solutions to improve their productivity.
We've implemented a number of new technology platforms inside the company, added loads of automation, and also more importantly created our own IP, as a result of which we are able to create very sticky revenue streams for ourselves, but more importantly transform our client, move them away from FTE-led models to completely different models.
And here there are lessons that can be learned from India's fastest growing IT company, Cognizant.
We are investing a lot in what we call as the Horizon 3 services, which is focusing on mobile solutions, cloud-based solutions, and also creating social enterprise and advocating the concept of future of work.
So the mantra here on is to adapt and evolve.
We believe that the organizations of the future will be far more adaptive, far more change-oriented, and far more flexible.
So far, Indian firms have been slow to adapt to change, but the tough global economic environment is challenging companies to be more nimble-footed. And since this is a make or break situation, the sector has little choice but to rise to the occasion.
But that's all we have for you in this edition of IT Inside. We'll be back next week. Until then, don't forget to write in with your feedback and suggestions. Thanks so much for watching.